Hi everyone, welcome back to the Growth Playbook. As you know that this might seem a little bit different, me starting off the today's episode by myself. That is because in this week's episode we have a guest, Ryan Tansom from Independence by Design. He is joining us to talk Bitcoin with Alan. So economist and Bitcoin expert are going to take the call and run with it and just share all sorts of different knowledge and insights into the mysterious Bitcoin. So stay tuned and thank you for joining in. It's our show. So I know I have a list of questions from just the I don't know anything perspective about Bitcoin. And I know, Dad, you brought some questions as well. And Ryan, I'm just looking at you as the Bitcoin expert on our show today to help us just parse through all these different questions and demystify this nebulous what is
Magic
Bitcoin?
money.
Yeah. I finally figured out what the cloud is. 2025, and I finally figure out what the cloud is. So just, I don't know how long it's going to take me to figure out what Bitcoin is.
It's the servers. That's awesome.
Yeah.
I mean,
Hey, Kim, maybe your first question we can throw in there too. What is Bitcoin in the simplest possible terms, but also differentiate between Bitcoin and cryptocurrency? People use them synonymously, but Bitcoin is a cryptocurrency, if I understand it right. So maybe Ryan could start us there. And
yeah, and I don't know if I'm going to throw a wrench into that question, but my question for you, Alan, is before we start is what is money?
ah,
This is
it-
gonna be so fun.
it's an agreed upon item of value that is exchanged for good or services. So it's perceived, and gold is inherently not what it's worth in the open market. And the dollar is certainly, the paper isn't what it's about. It's the belief and faith behind it. In some countries, it used to be copper. It's just it's the perceived value that people give it.
Love it. I would agree with most of what you said. And so my definition, I think this is because this is, I guess I like kind of layer into the question. My definition of money is it's a open ledger of IOUs based on how we spend our time creating value for each other. And so that ledger of IOUs of the tallies, because back from what I've gathered in Sumo, they had I owe you this, you owe me that, kind of before written language. So that open ledger is a bunch of tallies. And before Bitcoin, which is an open ledger, there was Mother Nature who had the open ledger with gold. Who has what? And they used it as a medium of exchange or a store of value to exchange goods and services in order to eliminate the double coincident or the coincident of wants problem where like the barter, like if we're trading with two tribes who don't know each other and we need trust, it's how to manage that open ledger. And so whether it's gold, Bitcoin, copper, shells, it's this ledger of who owes who what. And then the big question that I have spent over a decade of my life trying to figure out is who controls that ledger and how do we eliminate the double spending problem?
I like what you said. I think I used a phrase that is inherent in what you said. There's an agreed upon value,
Yep. Yep.
because there has to be that agreed upon value. And I think and Kim, correct me if you disagree, but I think in terms of this podcast, if you get into controlling the open ledger and that sort of stuff, I think you might find some small group of people who are going to be, man, that guy's brilliant. And another group of people who are going to look at you and go, what the heck is he talking about? So you may want to keep it fairly simple, but I don't mean simple, but you know what I mean, easy to be understood by the average person who doesn't know squat about cryptocurrency or Bitcoin.
Well, and I
Um,
think that's where, Alan, that's why I like, because I got a D in accounting. And like, and I realized over my life, I just don't want anybody telling me what to do. And if I have to have complete sovereignty over my life, I need to have sovereignty over my time. How I spend my time, I earn money by creating value for others. And so as I earn money to create value for others, the market determines that value, kind of like you said, Alan. So like, if I'm doing something, hopefully, I mean, this is where open trade and free trade comes into play versus the government gives you a bunch of money and then now you go towards the money printer. And I think like the open and free trade, Austrian economics, were like, hey, the market should determine value and determine price based on free markets. I will then use that as a signal to figure out how to spend my time. And then I store that time in money and I want to make sure that it's preserved in value and that's a tally. Like I owe Alan 1 hour of babysitting or whatever. I mean, it's really time. And then what ends up happening, I mean, I think it was you on our last podcast, like every business owner should reconcile their balance sheet so we can get a cash flow statement. Well, if someone's stealing from our balance sheet because the assets and liabilities don't have to balance, who is stealing the money? It's the person controlling the ledger.
Mm.
So I don't know how simple we want to get to, but I usually use like my example, my twins and how they spend their time earning money. And if I just gave Everly money while Zoe had to work for 5 hours, I'm stealing the other one's time because I got twins, right, Alan? So I'm the fair cop. Like, what is fair? Fair is you have to earn your own keep. And then like if I'm the one controlling the ledger, who made me God? It should be energy and time is what reconciles the balance sheet, in my opinion. But I don't know how if that is too complicated or not too complicated. That's why I think having this conversation before what is crypto and what is Bitcoin, we're just constantly, I think, double clicking into like what, but it nests inside of these ideas.
I don't disagree in the least. I'm probably at the risk of being repetitive. I'd make it pretty quick to bring it back to because people will be listening to this because they want to know more about Bitcoin and not so much the theoretical value and uses of money. So I know it's related to Bitcoin and all the rest of that because
Totally.
but I wouldn't take 5 minutes to set that up if you can avoid it because I think some people might click off after a few minutes of that theoretical. If there's a way to keep it to a couple minutes, I think that's a
Fair.
plus.
I just don't know like why it's theoretical when so all Bitcoin is an open ledger and it's audited every 10 minutes and it cannot be unbalanced.
I think it's because most people look at Bitcoin as a way to pay things, or a way to get rich, a way to preserve value more than the deeper thoughts that you were giving it. Uh, Yours would be a great course on cryptocurrency and Bitcoin. And Kim, I could be wrong, but I think a lot of people would be listening to this. Should I trust Bitcoin? Should I invest in Bitcoin? Is it safe for me to do? Is it in danger because of that type of thing? But I could be wrong, Kim, in my approach to this.
How do we understand like gold is a rock? Like, and so like, are we going to speculate on gold? Are we talking about leverage derivatives at 100 times leverage of ETFs of gold? Are we talking about physical gold? Where are we storing? I mean, like, so like I'm a contextual guy. So like I have to know like why are we doing this? And if I'm going to be placing my bets of my time, where am I going to spend it? And so if we nest Bitcoin inside of that, the way it, so to answer your question, Alan, how in my words, it is okay. So when someone says, because if I say I'm a Bitcoin maxi, because that's what I am, I save all of my time and my money into Bitcoin. Well, someone goes, "Oh, you're a crypto guy." I'm like, no, that would be like someone saying to you, Kim, okay, well, you like gold. Oh, you're a metals gal. Well, aluminum, copper, like steel, like it doesn't make any actual sense. And so there's Bitcoin and then there's shit coins. And so like there's a lot of other cryptocurrencies, just like there's a lot of other metals, but there's only one store of value, which is gold, because it's on the periodic table. You can't make it, and only 1.5% gets created no matter how much technology we apply to it. The inflation's only 1.5%. So until Bitcoin came around, which is a fixed supply of 21 million coins, each coin can be divided by 100 million Satoshis. So it's divisible. So that way we don't have to break off a piece of our house to use something. So the medium of exchange is fixed because, or is solved for because you can each, Bitcoin, 1 million Satoshis, it's fixed supply. So no one is inflating it. It is audited every 10 minutes through game theory with the Bitcoin miners and the nodes. So everyone's incentivized. It's a trustless system. I don't have to trust Alan or Kim to audit the Bitcoin. Everybody is incentivized every 10 minutes to audit the Bitcoin to balance the balance sheet. And it's stacked on top. So the blockchain is every 10 minutes you're stacking on all of those transactions, which I think is like 216,000. So you're building this ledger that's open, that's privately held, like as far as like the cryptography, make sure that it's not Kim paid Alan $10, but effectively it's just a ledger. Every 10 minutes that's balanced out and you can't inflate it. And so Bitcoin is a fixed supply. And like my daughter is saving Bitcoin, but like the US dollar is what goes up, not Bitcoin, because the
Right.
US dollar is getting printed out of nothing.
That's great. Let me just throw out a couple thoughts based on what you said, because I like what you just said. I think without using the word, we're both talking about scarcity of gold, scarcity of Bitcoin, because it
Yep.
is a fixed amount. And so it's the
Yep.
scarcity of something that helps gives it its value as well as the demand. If it was sand on the shores, it's a different item. And
Right.
I
And
love
because
what you
that
just said.
isn't it.
Go
So
ahead.
sorry, and my question for you is, isn't it that scarcity which is actually what helps reconcile the balance?
Yeah. Oh, yeah. I want to get to, all right, let's deal with that. Well, no, I love what you said about Bitcoin versus shitcoin. I mean, most people don't talk about that. They think they're all the same. And
Yeah.
and they really do. And they go, what's the difference? And people in politics or in business or work in a garage are trying to make money off of this. And if
Hmm.
you invest in the wrong medium, you're wasting your time, to your point,
Hmm.
and your
Hmm.
effort, and you're going to be grossly disappointed in the end. So I think what you just said is a really key statement that if you could build upon why Bitcoin versus the others would be fantastic, because we're all inundated with
Yeah.
all
Yeah.
these
Yeah.
other coins out there and cryptocurrency in general. And I love what you said about investing in metals versus gold. I mean, that's a great way to
Yeah.
explain your position. The
So go
Yeah,
ahead.
go ahead with that, and I'm going to jot down my thought though before
Okay.
I ask and forget it.
Yeah, and I'll try and be succinct with it. So gold doesn't have a CEO, nor does Bitcoin. If your cryptocurrency has a CEO, it's a shitcoin. And so it like right, like I just want to make sure that someone's not inflating my money and stealing my time. And so like why I landed on Bitcoin is because it's a fixed supply, it's a trustless system that every single person or agency in the ecosystem is incentivized to balance it out and not inflate and not have the double spend. So like XRP or anything, like honestly I don't even keep my brain, I keep my brain from even like going down the Ripple XRP. I mean, there's literally like 15, 20, 100,000 of these because like Allen coin, it's like, well, you're like, if it's not, so there's the proof of work and proof of stake. And I think, and I don't want to get, again, this is gets super geeky and again, different than the theoretical, but on the technical side. And that's why threading this needle is hard. Proof of work means that everybody's incentivized to balance out that balance sheet every 10 minutes regardless of like no one owns it. So the miners get, a reward for making
Yep.
sure it gets balanced out. They spend money and energy to balance it out. Well, they don't want that to be corrupted because then all of their efforts would go to waste. I don't want to have to like store my value. It's like Bitcoin is a trustless fixed supply balance sheet that is reconciled every 10 minutes. No CEO, no one controls it. It was a code and the network effects of like now what is I think started to happen, Alan, over the last 3 years. I mean, because I was not involved in this at all 18, 24 months ago
No.
at all. And then I just was like, I spent 11 years looking at the problem in the face. I'm like, oh my God, look at this thing. And I think the network effects are taking on where when you said at the beginning of this conversation, it's the perception of value. So now that I mean, like now that you or I have it, we could actually store our value. And I think Bitcoin has landed as a store of value, as a protection and hedge against the debasement of the dollar and all global currencies. And you can see it. I mean, gold's price is manipulated with all the papered gold, but like the Bitcoin becomes a store of value, I think, first to avoid the debasement. Well, all these other cryptocurrencies Kim could be this. I mean, there's a CEO of Ripple and XRP, and they can issue more and then give it to their cronies. So, like,
Yeah.
there's this whole like, is it a company? versus is it a bear asset that has it's a fixed supply with no CEO?
Okay. So Ryan, we got our forecast of a Great Depression coming in the 2030s. Okay, you know that. We've talked about that.
Yep, yep. I'm a subscriber to it. Yep.
And thank you. And there's no charge for that subscription. That's
I'm just your cheerleader, Alan.
Okay, so when we get to the 2030s, the stock market is going to fall, housing values are going to fall, not 90% like some people claim, but we're going to see the value of things go down. And the value of the dollar will be going down because of things that we have done and that sort of thing. Your forecast, because I was into forecasting, what's your forecast going to be for the value of Bitcoin in that time period? Because for somebody my age, that's the ultimate test, right?
Mhm.
I want my life's,
Work to
we'll
be
call it
stored.
savings, not really saving,
Yep.
worth, net worth
Yep.
to be protected. Tell me
Yep.
whether I should feel good or not.
And I actually have a question for you too, is on this is so when I think about, like, if I'm trying to anticipate the future, which I'm not, I don't have a crystal ball, but like what I do, and you've helped me a lot with this, is what are the knowns? People are getting older, a lot of them. I have a $2 trillion deficit, and most of our spending can't be cut. So like, what are we going to have is more and more spending because of the demographics. The demographics are leading a lot of that. And so the only way to get out of this 120% whatever or more debt to GDP in the deficit is to cut spending, which we can't really, or increase productivity while all the people are retiring that we tax. So like, you've helped me kind of frame up this problem. So my question for you, and I haven't figured, I really can't, I wrestle with this a lot, and I do have my specific thoughts about Bitcoin's price, but will the market crash, or are we going to inflate ourselves into oblivion? Because like, if we're going to like, we have to keep printing to keep everything going, and there's like, what, a 95% correlation with the demographics and the working population and the deficit. So like, are we actually going to debase the dollar so much that then like, actually, like, the price of Bitcoin will go up in proportion, like get M2 money supply growth worldwide and liquidity, because 75% of the global economy is debt refinancing at this point. And with every time we do that, we debase the dollar even more. So where that leads to, Alan, is I've been seeing, and like, so like, whether it's BlackRock now or Michael Saylor or these big treasury companies, we can talk about some of those if you want, why they're doing this. I think it's really important for our business community to talk about why they're doing this, but there there's a high correlation with the debasement and the price of Bitcoin, and the as it grows as it from 2% of world assets to even 5, like Fidelity and BlackRock both have this. It's now like 10 million a coin by 2035. I'm sorry, by 2040 or something like that. So there's all these different, speculations, but a lot of it has to do with correlated with the liquidity and the growth of the money supply, so people can hedge against it. So I don't like, and back to my question to you is like, does the market and everything crash, or does it crash up because no one can afford anything?
When you say market, tell me what define stock market, housing
Yeah.
market.
So like, when I look at like the stock market and the housing market, the whole economy, like 75% of the economy is based on asset inflation refinancing. So we actually can't let the market go down, and the
Oh,
pension
I see.
funds. So like, you have everything that has to be stuck there because all the boomers got HELOCs, and like, I got my neighbor across the street. I mean, like, he wants to retire. I'm like, dude, no one's gonna buy your POS house for $900,000, and it's at 9% or whatever. So like, all of a sudden but like, he can't afford to sell it at that because he needs his retirement. He needs his fake 400 grand in equity.
Yeah.
So I feel like this, like, there's this propping up that, like, if we let that crash, and maybe that's your answer, or thoughts, is like, it actually, we do let it crash.
It's not that we, well, for one thing, I wonder if you and your neighbor are close with that attitude, but
It's yeah, like,
if he
I mean,
watches
like,
this.
honestly, like, it needs like 300 grand worth of work. It's a split level with oak. It's got blinds from the 80s that are as old as me, and like, he wants 800 grand for it.
Okay. Um, I think the a fundamental thought in there, and again, you cover a lot of ground, and you bring all sorts of thoughts to my mind. I try to sort them out as we go along. Um, I heard you say, do we let it? And the answer is we can't stop it. Government cannot stop the
Right.
decline in the market and in prices and in homes. The market cannot stop it, and we, the people, cannot stop it because of what will have happened to, uh, because of inflation and higher interest rates, our ability to consume. And if the
Hmm.
consumer has to slow down and stop in a lot of areas consuming, then the whole thing begins to fall apart. It's fragile, and
Hmm.
the picture you pointed is to its fragility. But businesses and consumers have to slow in their spending, then the thing unravels, and there's not a blessed thing the government can do about it because of the debt that you talked about.
Hmm.
And if all of a sudden we just sell more and more debt, well, more and more of anything you put out in the marketplace, it loses its value. If you just dump the world full of sugar, sugar loses its
Yep.
value. Dump the
Yep.
world full
Yep.
of U.S. treasuries, loses its
Back to
value.
the scarcity.
Yes. And so the interest rates go up, the value of the dollar goes down, and that creates an inflation cycle along with the higher interest rates coming from inflation. So even more interest rate rise, which stops economic activity,
Hmm.
or slows it down dramatically, doesn't stop it.
Yep.
It's a machine that is not governed. It is a machine that depends upon the different facets to work. And when a piece breaks, then that sucker has no choice but to see market decline.
I I track you, and so I got back here the U.S. the history of U.S. or the history of the U.S. money and banking in the or the history of money and banking in the U.S. by Rothbard, and like I've read like so like when I like have studied the different cycles over the last 500 years, it seems to me that like every time the government prints. And the government prints and they have curve control, whether we have a central bank or not. Like that's a whole nother conversation for like a 5 hour day of like, should we even have a central bank? But like the government prints, they borrow at lower costs while inflating all of the assets to melt away their debt. So the yield curve control and actual letting inflation go is the only way out to get to the GDP, debt to GDP back to 60% or so. So they have to melt it all away in proportion, but therefore it's just stealing all of our wealth through asset inflation.
I think the amount of, again, you always bring up 13 questions when I listen to you for 13 seconds. So, I mean, because you're deep, you got lots of stuff going on. In the past, we have seen government print money. They don't actually print it, but increase the money supply. M2 deflated.
Control P, just with a
And,
computer now.
and so as they have increased the money supply, it helps spending. And as it helps spending, it can eventually lead to inflation and everything else that we just talked about. There comes a point, though, where, and I believe this to be true, and I'm not the only one, where the bond market says to the United States, you guys are nuts. The
Hmm.
amount of debt that you have and the fiscal irresponsibility that you're showing made me want to just invest in Switzerland and in Australia, Canada, places that don't have the spend problem that you guys do. So again, it's a demand issue
Hmm.
on a
Hmm.
global basis on the bond market that will determine the viability of the plan you put forth. If the bond market says, I don't care what you guys say, this thing is a house of cards,
Hmm.
then it's a game over situation because the demand has dried up.
Track you 100%. And that's why I now look at the 10-year treasury because that is the indication of the demand of sovereign wealth nations and banks and everything. So, like, some of the things that I've been following is that yes, the demand people are that's why like there was the decoupling, and even if Jay Powell reduces the rates, we still go up because it's proof that it's the house of cards. But that's where the yield curve control comes in. The government starts borrowing at lower rates, and then everyone else has to borrow at higher rates. And the Federal Reserve is actually the one filling that bucket of that hole through the debasement. So that inflation then is what's melting out the debt to GDP. So like what happened with the Denmark glide or the Dutch glider or the British pound all the way down to then like 19th with with Fed with FDR and then 71 with Nixon. Like all of these different things are just how to deal with what you're talking about from what I've gathered. And then when you get to the long-term part of this, it's so like if it collapses, I just okay, maybe this is where the clear answer. I don't think they're going to let it collapse. I don't think all of the old people in Congress and the Senate are going to let everyone's stock market portfolio and their housing collapse. They're going to print and save the pension funds who are $4 trillion exposed to PE because of the low interest rates for 15 years. And so I just maybe it's kind of a back to I don't think they're going to, and how this then like how this reflects scarce assets is when that happens, Bitcoin and gold and other scarce assets like housing and on riverfront properties and lakes and all this stuff that's scarce will become more valuable because of the demand or because of the inflation of the money supply.
Okay, so I think you answered the question is there. You think Bitcoin and gold in the 2030s becomes more valuable?
Scarce assets will be, I think.
Scarce
Yep.
assets. But yeah, but
Yep.
we're on a Bitcoin
Yep.
discussion,
Yep.
so I
Yeah.
brought
But
it back to
and
that.
so like I think that in Bitcoin's correlation with M2 money supply globally is like you should check out the chart. I mean, it's like it's a 13-week leg. I mean, it's crazy because the M2 money supply, and I can literally show it to you right now, Kim, if you want to put it up there, or
You can probably share it, right? Yeah.
it's
You're better with technology than I am.
It's in the cloud, Kim, don't worry.
so
I know how to find that now.
this is one chart that I mean I've got a lot of your charts, Alan, in here. So global M2 money supply and Bitcoin. So like I'm literally watching the M2 money supply growth. It's one of the big indicators of price.
What's
And
the lead
then
time on it?
it's 12 weeks because the way that again, one of the people I follow a lot is Lynn Alden. And she wrote a book called Broken Money. A lot of the concepts I've been talking about comes from her. And she talks about there's the base money supply, which is why we didn't have runaway inflation in 2008 because they didn't get into the banks. And then there's the broad money supply, which is the fractional banking reserves. And so that they want to get it into the banks and expand that money supply, which then increases asset price allocation or asset prices. And then we have this debt refinance cycle that's every like about 45 months. And it just won't. And we're just refinancing debt because the economy is no longer based on cash flow. It's based on debt refinancing. And therefore, as the M2 money supply grows, there's a correlation with Bitcoin and with gold. I mean, gold price is way more manipulative because of like JP Morgan and all the other big,
Right.
derivatives markets. And so it's this that I look at and then like the stable coin bill, like my way of like understanding what just happened with the Genius Act, it's like they got $9 trillion to refinance in the next 12 months. The 10-year treasury is not giving any give because of all the things we just talked about. Like the whole world's going, screw you, US. You're just going to debase us. And so then they can't, and Jay Powell's not reducing it. So then the stable coin, the way I've been articulating it to my business clients is like, okay, let's say your senior lender doesn't want to give you any more money because they're overexposed to you. You've got your line of credit, you got your SBA loan, and maybe a conventional loan. So you say, okay, well, fine. I'm going to go literally crowdsource another $9 million in debt and not tell the people that crowdsource that I've got a senior position. So it's like, it's just like this house of cards. But the stable coins, by inflating the dollar supply and the pressure release going to people in Nicaragua or Venezuela or Ecuador who have more volatile currencies than us, they'll gladly take something that's an 8% debasement a year compared to their 30. So
Sure.
we'll have this pressure release. Bitcoin is now a global reserve asset that's neutral to get away from the dollar and all the crap that we've been pulling on with people for the last 100 years. So the global M2 money supply growth is the thing that I look at because it's like, well, the whole world, as liquidity in China and people are printing in quotes money, it's flowing into a store of value that's fixed. And the thing that Bitcoin fixes that gold had a challenge with is gold was centralized because you can't, I mean, if you and I want to do commerce, like I'm not going to bring a cart of gold, then the cost of like actually validating it. So Bitcoin every 10 minutes, someone moved, I think it was $9 billion last week for $5 across the world. It's validated every 10 minutes. And so you have the divisibility, the scarcity, the transportation over time, and the store of value over space. I'm sorry, it's over space and then over time with the scarcity. So there's this gravitational pull towards Bitcoin, a black hole for most financial assets, where all of the other cryptocurrencies have CEOs and people are gamifying it, and it's the grift and it's all it's not a bear asset.
You're making a great case, and I love it. And I think you're right about the money supply, global money supply, trying to fight off the depression and that sort of stuff. So, on your chart, this is probably an aside. Do you have that going back further in time than 23?
I can find it because I think that's important too. And there
Yeah.
is one that's
Okay.
out there. And I think what I've gathered from the people that I follow closely, which Lynn Alden, Michael Saylor, Saif Adim, and some of the people that I went to the Bitcoin conference in Vegas in May. And so like there's a lot of the data that comes out there. Lynn Alden, when she presented at the Bitcoin conference, she has like almost like a 500,000 views now. It's like an 18-minute, it's like so data driven. Like you would probably geek out on the amount of data that she has. Cause like, and she is not even, I would say that why I'm bringing this up is lots of data because she has been talking about this stuff for like 15 years. And as Bitcoin adoption curve happens, there becomes tighter correlations towards certain things.
Sure. Sure. Yep.
So but I think it's important to look at the whole picture and the trends, like you always like rates of change, right?
Yeah. Yeah.
Thank you, everyone, for joining today's episode. Don't forget, there is a part 2 to this that will be airing next week, where they dive even further into how to get started with Bitcoin, as well as cover some of the main risks with investing in Bitcoin. So, as always, please remember to like or subscribe. Subscribe on YouTube or on Spotify if you want to get the alerts of when new episodes drop. And look forward to seeing you next week.